Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Great to have you with us here again at AusBiz. So, fears that President Trump's new tariff regime will trigger a global recession have prompted a re-evaluation of earnings growth and a brutal sell-off in equities. Wall Street's benchmark there slumping ahead of the largest one-day percentage loss in around 5 years, while the volatility index touched the 3-week high. As we can see, the Russell, the hardest hit there, the NASDAQ off 6%. Well, those tech stocks did suffer big declines, with Apple reeling from an aggregate 54% tariff on China, the base for much of the iPhone makers' manufacturing. Nvidia and Amazon also sold off. The big banks such as Citigroup and Bank of America, which are sensitive to economic risks, they fell, as did JP Morgan. And the retailers were hit hard. Nike and Ralph Lauren falling on a raft of new tariffs on major production hubs, which include Vietnam, Indonesia and China, while Lululemon also tumbled. And the car makers were hit as auto tariffs of 25% kicked in. The EV makers Rivian, Lucid and Tesla also falling. ExxonMobil and Chevron fell as crude prices slumped, and the copper miners extended losses as the price of the key metal slipped on fears that tariffs could fuel a global recession. Well, US tariffs of 25% on vehicle imports are now in effect. And then we have those countries hardest hit by Trump's new levies, including China, Japan and Europe. China and the EU have vowed retaliation, prompting fears of a trade war spiral that leads to recession. China's Commerce Ministry is stating that China firmly opposes this and will take countermeasures to safeguard its own rights and interests. And European Commission President Ursula von der Leyen saying uncertainty will spiral and trigger the rise of further protectionism. The consequences will be dire for millions of people around the world. We're already finalising a first package of countermeasures in response to tariffs on steel, and we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail. Well, in the United States, Fed Vice Chair Philip Jefferson has said that with the US economy, it is still in solid shape, although acknowledging that tariffs are already pushing upward on goods inflation, saying, in my view, there is no need to be in a hurry to make further policy rate adjustments. Well, US Treasury yields have plunged on recession fears, with the non-manufacturing Purchase Management Index remaining in expansion, but falling well short of economists' expectations. The yield on the 10-year note tumbling almost 15 basis points to 4.04%, and the 2-year was down close to 19 basis points to 3.71%. And the US dollar has sunk against its major peers, dropping to a 6-month low against the euro. The Aussie is sitting at 63.3 US cents. And Bitcoin has fallen back to under 83,000 US dollars. Well, oil prices have plunged, registering their steepest losses since 2022. That's after OPEC Plus agreed to a surprise increase in output following President Trump's tariff announcement. Brent futures falling close to 7% to $70 a barrel. Copper has continued to fall, down some 4%. Iron ore about 1% lower at 106 US dollars a tonne. And the gold price has retreated from an all-time high as a wider market sell-off affected bullion traders. Spot gold down more than 0.5% to $3,113 an ounce. So much moving on markets at the moment. Let's focus what's going on in the States. Brad Gastwirth from Unearthing Opportunities joining us via phone. Brad, good to catch up with you. You're on the road at the moment. Looks so much happening right now. How would you be describing that market response we've seen to what we've heard from Donald Trump?
Yeah, Andrew, thanks for having me. And what a day to be traveling. Clearly these tariffs have major impact to global financial markets. And I think the uncertainty that we're seeing and the impact that we're seeing on the markets is going to continue. I think that the responses from China and the EU might be pretty harsh. And I do believe that a spiral may take place, which is going to put further pressure on global financial markets.
Yeah, in fact, we have heard, as I mentioned there, China looking to retaliate, and the Trump administration saying, well, they will then retaliate back. So that leads to that potential spiral that we're talking about, where tariffs go up and up. we take a look at the effects, particularly on stocks. What are you seeing there? And I guess, in particular, those companies that have exposure in markets like China.
Yeah, Andrew, and it's really the most important question that you just asked. I mean, this is part of the reason why Apple took it on the chin a bit today and recently. I mean, they have a majority of production from phones coming from China, and as you get significant increases in tariffs in the region, it's going to hurt their profitability. They have two choices: either to absorb it or pass it on to the consumer. And this is really the concern about wage or product inflation that we're going to see in the coming months from many products that you get either manufacturing or exported here to the United States. So financials will absolutely be impacted. And this is a major, yellow flag, if not red flag. And to your point, I mean, you mentioned this in your prelude. I do expect the spiraling to happen, which will certainly cause more pressure on markets.
Brad, also the retailers in the firing line at the moment, in particular those with factories in Asia, those economies there among the hardest hit in Trump's tariffs.
Yeah, you're absolutely right, Andrew. And if you look at a lot of these discount retailers, they get a lot of their products or a lot of parts from China. So I feel like it's really hard to hide from these tariffs, and they're going to have major impact to many companies' financials. So, yeah, I mean, this is definitely, it's hard to buy this dip right now. I think we have to still wait and see, but I think the news that will come will be more negative than positive here, at least in the near term.
All right, Brad, dare I ask, you've mentioned gold every time I think we've spoken to in the past couple of months. Where are you looking to park your money at the moment?
Yeah, and actually, I think it's probably been a couple of years. Every time we talk, I'm bringing up gold. I still believe gold is a must-own in people's portfolios. It's one of the greatest hedges. It's a great, tangible asset that has value, that's recognized globally. And in times of uncertainty, especially in times of inflation, it's an absolutely great hedge. And I do expect it to continue to make new highs, especially when financial markets are in turmoil.
Brad, it is such a busy time with that volatility at the moment. Thanks so much for spending time to speak to us from Unearthing Opportunities.
Thank you, Andrew. Appreciate it.
Brad Gastwirth there. Let's come back home. Just take a look at where we're likely to get going. Look, no surprise really. SPI futures off 1.2%, so another day of heavy selling expected. And there will be a focus on, in particular, the stocks with exposure to those hardest hit economies of China, also the likes of Vietnam, for instance, where we've seen a tariff around 46%, Cambodia, Myanmar even, which is suffering at the moment because it's dealing with an earthquake. No respite there at all from the Trump administration. And as I mentioned there are fears now, more broadly, that it'll be tit for tat tariffs with China looking to respond in kind to the United States, and then the US saying, well, they'll hit back again. Where does this lead us to? We're going to get right across the open when we get going in just a couple of minutes' time.